Hello and thank you for checking out today's market update video. This is Jason Wink and today is Friday, September 6th. It's about 3:20 p.m. so shortly before market close at 4 o'clock and also the conclusion of this week. I just wanted to do a real quick update. I talked about this a couple days ago. I should say I wrote about it. I didn't do a video. And how the market had fallen through its 50-day moving average. It had, it was making an attempt to come back up, and the comments I had was that it was either going to hit this resistance here and come down, which I think could have gotten kind of ugly, or break through and go up higher. That's what it did last time this happened back in June. The market had dropped out of its trend that had been in for a very long time, had a couple really bad days, dropped it below its 50-day average, which had been for quite a long time really as low as the market had gotten. But it only took a few days. It went back up and ran into a little trouble. You can see where it traded sideways for a few days before breaking through and then rallying to new all-time highs. So be curious to see if that exact same pattern replicates itself, because as we're sitting here today, today was a really wide trading range. The market was down 1% at the open, then it was up almost maybe 0.6%. Now it's kind of settling down a bit as we get in towards the close of the day. So the S&P 500 is almost exactly at its 50-day average, just a hair above it. So I really think the key is going to be how the markets react next week, Monday through Wednesday. If it gaps up, has a big move upward, I think that'll continue and very possibly bring the market to new all-time highs. If it struggles, if it kind of trades sideways and then falls below, then I think we'll be coming down somewhere in the vicinity of where this long blue horizontal line is, which would be around 1560, or about a 100-point drop. A 100-point drop on the S&P 500 is about 5%. So I think the next few days, market days that is, will be pretty key. Today was really interesting. We had really pretty bad unemployment data, and that made the market rally. Go figure. And I think part of the reason for that is every time we get bad data, the sentiment really, or the sentiment, excuse me, I'm not talking about dirt here, I'm talking about the way people feel. So the sentiment, excuse me, is that when we have bad news, the Federal Reserve is less likely to do things like tapering and more likely to continue to stimulate the economy. And a lot of traders like that. It's not really what's best in the long run. All that stimulus eventually has to be paid for, either through inflation or actually paying down the debt. In any event, what's going to happen is when we have bad news, traders kind of take that as the Fed won't do anything that's designed to slow down their pumping of money into the economy, and so the markets tend to take it actually quite well, which is, again, kind of bizarre. When there's sometimes very good news, the market doesn't actually jump as much as we might think it is, because that's also, kind of contradictory to bad news. So the Fed's more likely, when economic news is good, to continue with their plan of stopping the long-term bond buying. So a day like today, just about everything is up. While it's not up a lot, stock market's only up 0.25%. It certainly made a big recovery from its being down 1% this morning. So that's all we have for today. Hope everybody has a really good weekend. I won't be able to write a whole lot next week. I have a very busy week with a little bit of business travel and then quite a few meetings with clients. So if anything really major happens, I'll try to carve out 5 or 10 minutes and post an update. Otherwise, likely be back writing again or recording some video updates around September 16 that week. So I hope everyone again has a great weekend. Thanks for checking out this video and have a great rest of your day.